We are honored to be joined by an exceptional panel today of leaders whose work sits at the intersection of policy, finance, and innovation. First, we have Alain Bejjani, former CEO of Majid Futtaim, and a prominent business leader, investor, and strategist shaping growth across the Middle East, North Africa, and South Asia. Next, we have Miguel Azevedo, Vice Chair of Investment Banking for the Middle East and Africa at Citigroup, with decades of experience, advising major global transactions. And Mahmoud Adi, founding partner of Shorooq, one of the region's leading investment firms supporting the next generation of businesses. Unfortunately, Mr. Azur was unable to join us today. And moderating the discussion is Adel Hamaizia, Managing Director of Highbridge Advisory, Senior Advisor at the Milken Institute, and non-resident fellow at the Harvard Kennedy School. Now, ladies and gentlemen, please join me in welcoming our distinguished guests.
And thank you. Welcome. Good morning, everybody. Extra congratulations for making it on a Sunday morning. We love the organizers. We love Noreen and Yusuf, but starting at 9 a.m. Noreen is just not great. This morning we'll be discussing geoeconomics in transition. We have, following on from a corollary of yesterday's, to really bring in some of the alliterative terms for the framing of our conversation. A couple of you have heard this. Miguel and I did a trial run last week at the IMF and with Jihad, and Ms. Zainab Shamseen in the audience has heard this, but I'm a North London boy. Does anybody know which famous author wrote some of his best works in Highgate in North London? If you do, you get Couscous, Tajino, ChatGPT, Ambassador Aaron. Anybody? 5, 4, 3, 2, 1. It was Charles Dickens. And of course, it's a Dickensian framing for our region often, right? It's a tale of 2, sometimes even 3 regions, and it indeed is the best of times or worst of times, at least at the beginning of this year. Unfortunately, it's become a little bit more tricky, even for those who are doing very well. At the beginning of the year, we saw strong non-oil growth in the region. I was joking earlier on, I said from Marrakesh to Muscat, but not necessarily from Tangiers to Tehran. We had developments on the AI and the tech front. We saw tourism growth. There were investments in the energy space. We had leading players from particularly the GCC, which has become the economic heartbeat of the region, going out to North Africa, going out to the Levant, Sham, and beyond. The aqua powers of this world, the Mubadlas, the $4 or $5 trillion of wealth that we're familiar with, had really sort of been, we've sort of almost seen what could be described as a regional rentierism, right? And we'll come back to that point. In terms of geoeconomics, since we're at Harvard, one easy definition for geoeconomics is the use of economic tools to advance geopolitical objectives. It could also be seen as the interplay between geography, economics, and politics. So everything from sanctions and statecraft, routes, rents, trade, tariffs, technology. You've seen some of that between the US and the rest of the world in recent times. So we'll be trying to think about all of this within the current context. Yesterday you heard some of those Ds of diversification, digitalization, and decarbonization. When it comes to the current situation with this fragile ceasefire, whatever we'd like to frame, define, call it, you have these other Ds which I think are very important for investors and the broader government response, which is duration, damage or depth of damage, and then deal or no deal. And somewhere in between doesn't work so well for some of the models and the ideas of driving these economies forward if you've got a gray cloud over the skies of the Gulf, right, in terms of planning, in terms of attracting FDI and the like. And this is something I'm trying to provoke some of my partners and colleagues to bring in. There was a French economist by the name of Frédéric Bastiat who argued that when trade does not cross borders, soldiers will. You could argue that drones are part of that equation now as well. And that's something that we can think about. We've seen supply chain disruptions like nowhere else. I was thinking of a term. You could almost describe our region, particularly that sort of broader Arabian Gulf, as a geoeconomic swing state, right? We've seen the helium with the semiconductors. We've seen 20% of LNG. We've seen 11, 12 million barrels knocked offline, and it's impacting the pumps here, Asia, and there'll be downstream effects on the remittances, the phosphates, the food, and so on. This is the broader framing that Jihad would have described if he was here. We saw some downgrades on a regional economic outlook from the IMF, for those that would like to look at the macro picture. But for the purposes of today, we'll be sort of working with our private sector leaders to elicit and solicit some broader insights. This will be a cool, collegiate, candid style conversation, to and fro, and we'll bring in the audience momentarily. Just to jump in, I don't know who wants to go first. Miguel, could you maybe share any key takeaways? The global financial elite were in Washington last week. You were there. You represent one of the leading US financial institutions in the region. What, if you were sort of in an elevator pitch and somebody said, what do we need to know? What would those takeaways look like?
Yes. Good morning, everyone. I think there's quite a lot of anxiety and curiosity to see what's the final outcome. I think there's a lot of wishful thinking, a lot of willingness to go back as possible to a balanced relationship in the region. But there's quite a lot of anxiety around the final transaction. I've heard as well, a lot of people saying it's time really to leave the countries in the region to find a solution and not having external agents influencing that solution. I kind of believe in that, but let's see what happens.
That assumes agency, right?
Yeah, and. So let's see. I think people realize that being an economy that has diversified from an economical standpoint was the right thing before. Now it doesn't seem to be that much important. What really matters is to have geographic diversification and to diversify away from your own geography, namely by building infrastructure that gives you optionality. I think there's a lot of interest in terms of what's going to happen there. I've seen a lot of people willing to put money to work along those lines, sort of the pipeline pillar. I thought it was very interesting to see that the economies that were performing better are the ones that were most hit. Qatar and UAE. I think Saudi did pretty well in the crisis. I think investors rewarded that. We have seen Saudi stock market is 8% or so above the day of the beginning of the war. So I think for Saudi was they managed this pretty well. And then you have Oman, which is kind of a very interesting situation. It was a country in very serious challenges a few years back. It seems to be coming out, and the geography is playing in their favor right now.
What do you mean by geography, Miguel?
Not being dependent from the Strait of Hormuz, effectively, right? That's on the opposite end. You have Qatar, which is, I was there the other day. They have so many buffers. I mean, there's not a sentiment of crisis, but there is the need to find a different way of doing business. But everywhere you go, you don't see any panic. Everyone has enough buffers in different levels of the ecosystem. And I think hopefully we are coming to an end of the sort of the war. And I'm still positive. Of course, there's some areas that the scars will be a bit deeper and will take a bit longer. And the more subjective they are, the longer they will take to go away.
I want to pick up on a metaphor, because I think I was asking our colleagues at the fund, the IMF last week, whether we're talking about nosebleeds or cuts or scars. And I think this point in depending a sort of differentiated tapestry when it comes to the region. Alain, you were leading one of the most successful conglomerates, still a successful conglomerate, across the region, embedded into supply chains globally. How should we be thinking about the sort of supply chain disruption? We saw, I know not less on the energy piece, but we've seen the Habshan UAE pipeline, which has done its work. We've seen the East-West pipeline with the LNG in the Kuwait and Iraq, less so because it's just not feasible. Could you maybe speak to some of these redundancies and whether they should be framed as redundancies or whether they were just strategic foresight in action?
I think the word has entered a new era, post-2020, of volatility being the new stability. We've seen it, of course, with COVID. COVID ushered that era. We've seen it with the Ukraine war. I mean, no one remembers how disrupted the world was post-February 2022. Now we're seeing it in this current situation where actually it's a regional war, but in reality it's a global conflict.
Yes.
And we have seen as well that the UAE in particular, the Gulf, but I think the UAE in particular, surprised the world in good days and it's surprising the world in bad days. No one was expecting that if there is a war that is so intense in terms of the focus on the UAE and the target of it, it will still be able to be where it is currently. This is not to undermine the reality that actually has been a very jarring reality for a lot of people. But obviously, this was not a surprise because the fact that the UAE has been able to do so well is because it was so prepared. And I think that applies also to the other Gulf countries, applies to Saudi Arabia to a certain extent, but it was not the same intensity. I think the question is, why was it so prepared? So if that threat wasn't there as much, why would you be so prepared and have invested tens of billions of dollars to actually prevent a situation like this one? So this means that despite the general consensus, this threat has always been there, has always been a real threat, and now it materialized. Which means that talking about the pipelines, talking about the other redundancies, they were actually not redundancies. They were actually being prepared for a bad day because there is a very deeply seated understanding and commitment that actually we will not be disrupted. We're building an economy that actually has to be able to continue to function as normally as possible, if not seamlessly, even in this type of situation. The good thing is that now we've tried it. It's tried and tested. I think that's very important. On the other side, the disruption to global trade routes, the disruption to supply chain is also real. And in my opinion, we're going to see after this war even more redundancies or, if you want to be, resilient supply chain networks. Post-COVID, we spoke about onshoring, friendshoring. Now we need to talk about basically a variety of supply chain. Now, if we focus on oil and gas, the region was much more hedged in the 50s and 60s. And this was primarily basically the ability to channel oil and gas all the way to the Mediterranean, bypassing Hormuz, bypassing Bab el-Mandeb, bypassing the whole distance. Obviously, because of what happened in the past 50 years in that part of the world, these supply chain routes have been totally dysfunctional and continue to be. So the pipelines to Syria, the pipeline to Lebanon, and so on are inexistent. We're going to see more of that happening. I think it's a good thing. The resilience of the economy going forward is going to be to a large extent dependent on the resilience of its supply chain and its routes. I think that we're going to see more investment around that. I also think that we are going to see a total, I would say, reimagination of how supply is going to work. We have a reality that emerged out of this war, which is the relationship with China. No one is talking about it much, but the region has developed in the past decade.
We're going to come to that momentarily.
Yeah, so the very important relationship with China that's actually also playing in this situation, we can discuss that a bit later. In my opinion, what is going to happen afterwards is actually a new supply chain routes globally, whether it is from the region or for the region, that is going to be invested in.
Absolutely, no, thank you. We'll pull on some of those threads, including on the routes and some of the big state-led ones. So many of you have heard of the India-Middle East corridor. You may have heard of the Belt and Road Initiative, where we're weaving this Silk Road across the region. We've heard about the Iraq Development Road. Most recently, actually, there were land bridges that came out of nowhere between Sharjah, Khorfakan, and Dammam. We saw Europe, Egypt, Oxagon in Neom. So there's more. And another thing, just for the framing of this conversation, while the GCC has of course become the lifeblood of the regional economy, we will widen that aperture and bring in North Africa and the broader region and the Levant. So don't worry about that. Mahmoud, you are leading one of the leading VCs in the region. You're also, I think you've graduated from the word venture capitalist to alternative investment manager, if I framed that correctly, or
Yes.
he paid me for that branding before. Mahmoud, one of the big things that we've seen in the region, particularly in the GCC, is this offering of quality of life, tax-free, sunshine, can put politics to the side for a little bit, and attracting ultra-high net worths, entrepreneurs, movers, shakers, Harvard Business School grads and the like. Is that model, is it right for there to be a question mark on that model? And something I think I mentioned, I forgot the other day, but and again, I'm maybe leading the witness here. There was a Financial Times article that said 1 in 8 Britons leave Dubai, when it should have said 7 in 8 Britons stayed. Could you maybe elaborate on your thinking about the model, as it were? Has it been pierced, scarred, bruised, broken, or is it going to be reconfigured and right-sized?
Look, first of all, great to be here with this amazing crowd and great panelists, and good morning, everyone. When we built Shorooq back in 2017, I think the entire model was not even viable back then. Like, everyone was questioning us. Why do you want to do venture capital in the Middle East, right? Like, this stuff work in the US, this stuff work in China, this stuff work in India. Like, the Middle East is a big consumer, but they're not producer. And we just wanted to flip that narrative on its head, right? Now, are we there? We're not there yet, right? We're still in the probably third, fourth inning. But that's the nature of developing any economy, any industry, any sector, right? Of course, the talent is a corner piece of the market and corner piece of what we do, right? We back people who are visionary, who sort of kind of trying to reimagine what the future look like, who's starting to think about, okay, the status quo is not working. How can we sort of kind of get more output per unit of input? How can we increase productivity and all of these things, right? And I think everyone today is watching and reading the headline, and there is a lot of anxiety, let's call it that way, right? But the reality on the ground, and to Alain's point, we were very prepared, right? We were ourselves sort of also surprised how much we were prepared, and surprised how much normality came pretty quickly to the sort of kind of, I would say, the lifestyle and the people on the ground. Of course, capital is scared, right? Financial advisors will advise, as like, reprice this, reprice that. But if you just zoom out and you look about a lot of the rewriting of the energy corridors, the trade corridors, the AI sort of kind of networks and the Stargates and all of these, our region, right, whether you define it as GCC, North Africa, Levant, wider region, it is in the whole mix, right? And for people who are dreaming about a brighter future for our region, still believe in that and still will come, and they will sort of kind of call the UAE, Saudi, Qatar, all of these different sort of kind of countries who've been really pushing the limit home, right? I think we really, to your point, we really underestimate the fact that if what happened now 50 days or 55 days, what happened, if it happened probably 15 years ago, we would not been probably sitting. I left Abu Dhabi on Monday, and anyone that I meet always asks me, like, how did you manage to fly? Was it okay? Was it like, it's not like, there's not even, we don't think about this stuff, right? If this was happening probably 15, 20 years ago, I probably would not be here. There would be a lot more damage and a lot of these sort of things. So why are we here? I think the important question is, why are we here today? It's not only the capital. I think we are misunderstood on our capital resources. Alhamdulillah, we do have that, and we're proud of it. But what is really unique is the leadership and the mindset of attracting great brains to call our region home and build alongside us, In addition to that, the diversification, or what you call the redundancy, or what we kind of call it today, is sort of kind of a mesh network of resilient supply chain. All of these things, right, are what make us unique, what make us a spotlight today, that I think I'm very confident in the day after inshallah, full resolution on this, we're going to emerge very, very strong. Actually, like, it is the time to long the market, whether you are a talent, whether you are a capital.
Heard it here first.
Yes, like whether you are entrepreneur, is the time to long market, like our part of the world, I would say.
So Mahmoud was speaking in a very UAE-centric, GCC-centric way just there. And of course, when you have a couple of $1 trillion sovereign wealth for the broader GCC. Question for the audience with a show of hands. Who believes that there will be some sort of complete deal? You can add all of the multi-players, US, Israel, into that formula. In the coming, or the sort of near to midterm, who feels that it will be business as usual come this time next year? Show of hands, anybody. Business as usual. So about 30%. Great. 30%. Okay. Who thinks that there will be a mow the lawn scenario, i.e. Israel-Gaza, Israel-Lebanon dynamics, where there'll be every 6 to 12, 18 months, maybe some sort of incursions, je ne sais quoi. Who thinks that's the case, with a show of hands? So we've got a divided audience, great, so about 30%. And of course that will impact business and attracting FDI and the confidence. So very smart brains here, so we should take this poll seriously, even if the minimum viable product of a couple of hundred people may be questionable. Miguel, connectivity came up, capital came up, crisis came up. On the capital piece, and Alain touched on this China point, we've been hearing about US versus China for some time. We can talk about supply chains. Yesterday we were talking about red versus blue and the Huaweiization of the region, if you like. But the question I have for you, Miguel, is the Petro One a myth? And do you see GCC and MENA states hedging with partners like BRICS? Or is this just realpolitik and it makes sense? We've seen the UAE join BRICS as a member state, despite the commitments to the US on $1.4 trillion. We've seen Saudi sit on the fence for a while, or at least that's how it looks. We've seen Egypt join. I actually used to frame them as stragglers sanctioned and sailors, the sailors being UAE and Saudi, the stragglers being Egypt, and I forgot maybe Ethiopia, Argentina.
You like these analogies.
I've got an addiction, an affinity, an affliction to this, yes. Miguel, tell us, Petro One myth or no? And let me just add one point, which is at the start of the century 2000, when BRICS was coined by Jim O'Neill of Goldman Sachs, I think G7 was around 60% of the economy. Now by 2040, we're expecting it to decline to around 20 and BRICS to go to 45. So please, what do you think?
Yeah, I mean, when you say BRICS, you're really talking about China and India. Everything else is just a diversion. China, I think it will definitely have a much bigger role going forward. Whether the Petro Yuan and all that, I think it's possible. Before I would have thought not relevant. Now no one can say that. Even if you look
You work for a US institution, right?
Yes.
Yeah.
And I've always worked for US institutions.
Goldman previously, right?
Maybe that's why. But you know, even in Europe, you talk to players in Europe and they see China in a different way than they saw it before, right? It's more of the instability associated to the US that is creating the need for someone that is more stable. So definitely a bigger role. In the future, who's going to buy oil?
That's the question.
That will drive a lot. So it's only natural. I think there will be, probably the weight of China will be bigger than it is visible. There will be some caution in the beginning, but I think it's a fact. It's there, and I don't see it as a negative. I think we are learning that having a more balanced world is not a bad thing.
But how do you balance, you know, it's about $500 billion trade, Arab countries and China, versus maybe a fifth of that, 100 odd with the US. But on the tech piece, the defense piece, it's a very US leaning. So yes. How do you sort of bring that together is this friction? Is it just how it is? Are we going to see changes in that formula?
That's an area that I don't know how to go there. But I wouldn't be surprised that no one is. I think this crisis shows you that being totally dependent on U.S. for your own defense needs doesn't guarantee you peace. So I'm not sure what's going to happen.
Are you suggesting that bases need to be tied to treaties? Bases alone do not suffice?
I think so, yeah, to be honest. I think it's a fact, no? It's just looking at what's
Is it a
happened.
fact, everybody? Do you need treaties for bases to be efficient? Raise of hands if you think they do.
I think so.
Interesting. Alain, you have invested and worked with all parts of the world. How does China fit into your view of the next 10, 15 years for the region? Does it become, I made this joke of my way or the Huawei, or should we be thinking about other partners as well?
You said highway or Huawei?
Huawei. My way or the Huawei.
That's what I thought.
Well, look, I have a very different point of view about China.
Perfect. We want divergence on this panel.
And US and BRICS and the world. I think one of the biggest issues
بالمايك يعني.
that I don't have a mic anymore.
Chinese technology.
Yeah. One of the biggest.
Actually, can we find out where is the mic made?
No,
Which country?
But this one is working. This one is working.
Okay.
So I think one of the biggest issues that you have is that for the past half a century plus, our vision of the world has always been through the same filter. So the word was a word that needed to be bipolar. It couldn't be otherwise than bipolar. So the problem is that this has impacted our DNA and our ability to see the world. So for us, even if there is unipolarity or more than a pole, we continue to search. We have a bias towards bipolarity. So we always need to see US, Soviet Union, or US, Russia, or US, China. So it cannot be 3 or 4. It has always to be 2. The reality is, and that's my personal opinion, I'm not sure there is a lot of people that would agree with that, but that's my opinion, is that one, BRICS is not there to oppose the US. BRICS is there because you have countries that want to find a way to actually establish a better, more level playing field with the US. So this is not saying we're leaving the US, we're going to China. The people that would be the most against, going to Petro One or whatever you want to call it, are going to be the people in BRICS. Because these people know their interest is not to replace dominant US with a dominant China. Yes. Everyone and his mother would prefer a dominant US over a dominant China. At least they understand the language. Okay. So the reality is no one is going into BRICS, maybe except China, to actually say we're moving away from the US. Okay, we want basically someone to replace the US. What you currently have is basically a game of leveling the playing field, to be able to have a better conversation that is more reasonable. And in politics, it's not about affinity, it's about interest. So when you have a bit more of a bargaining chip, you can actually have much more constructive conversation. So this is one of the main motivations why a lot of people in BRICS, and I agree with you, not China, are there. China, of course, would love to benefit from that, because at the end of the day, if they don't get 100% out of it, they still would get 30-40% out of it, and that's a plus. On the other side, when you think about basically what's happening going forward, and you look at the Chinese economy post-WTO, entry into WTO, and what happened, and you look at basically the prominence of China in the world, it hasn't gone commensurately with the prominence of the Chinese economy in the world. Okay, China, we can't just copy paste across the board like an Excel sheet where you put one thing and then you take it, you drag it at the end, and it's everywhere. It's not the same. The geopolitics are different, the geography is different, the interests are different. Okay, so a big China that actually has a large economy and has a good military presence and has ambition, has road and Belt and Road Initiative and other things, does not mean what that would have meant if it was the US.
Yes.
So my point of view is that the world is not, we're not heading towards a confrontation between China and the US. What we're heading towards is actually a complementarity that is currently trying to find the basis of that deal or that common understanding, that complementarity that will have to take place between China and the US, including other countries. Now, Europe, okay, in my opinion, has outsourced a lot of its thinking and capabilities to the US for a very long time. And naturally, they're late to the game. So what they're trying to do is to hedge. Okay, hedging is not going to work. What you need to do is actually, you need to double down in order for you to actually become a player anymore. If you compare that to what happened in the region, and I want to end with Iran. If you compare that to what's happening in the region did not hedge. What the region has done is build capabilities and actually build genuine cooperation agreements and platform with China and with Russia, despite their ability to keep an excellent relationship with the US. They don't have the largest economies comparatively to what Europe has. They don't have the same endowments that Europe has, but they have more nimble, flexible, and I would say innovative policies that allow them to be here and to be there to actually make the best out of two worlds. And I think this is going to be one of the playbook, okay, of I would say global relationship or international relations going forward. And then you end up with Iran, okay, because Iran is a major player, not in its current form, but this is the last. Iran and North Korea and Cuba, but it doesn't count as much. Iran is one of the last, I would say, 100 million people economies that are out of the global economy. Okay, Iran has decided to play its card now. I agree with Mahmoud. Had it played it maybe 10 years back or 20 or whatever, we don't know. We can't rewrite history. This is where we are. They decided. They've been building up 50 years to play this card eventually at some point. The point came. They played the card. Okay? Once you play the card, you can't go back to what it was. Okay? The reality of Iran going forward is that it's a 100 million plus economy. It was much stronger than what it is pre-February 28. Okay? Now it's an economy that is in need more than what it was. It has reconstruction capabilities. The Iranians were floating to $170 billion. I think it could be more given the scale of the country that they did not have to worry about a month ago. Okay? 3, Iran cannot continue to function without a modus operandi in the region. Iran has been functioning because it has established or find a way to keep what we can call, between inverted commas, kind of good neighborhood relationship with the UAE. They've improved their relationship with Saudi Arabia via China since March.
Iraq and Oman technically trying to get it.
Exactly, and so on and so forth. And they've also built a network of proxies in the region that give them access to a lot of what was happening there. Going forward, Iran needs a new modus operandi more than the region needs this modus operandi. Forget the rhetoric. The rhetoric is there, is needed, is always there in these kind of situations when you build up towards a deal. But at the end of the day, it cannot function. So if you press a button, you won't have electricity in Tehran if they cannot find a modus operandi. This is why, in my opinion, we are ushering an era that's very interesting. I'm personally very optimistic about it. China will play a very important role that's going to be much more constructive than the role that we have seen so far.
Thank you, Alain. Before coming back to the trade routes point and maybe marrying it up with reconstruction, and we'd like to bring Syria into this conversation, just a quick show of hands. Based on what you've heard thus far and your own insights, perspectives, views, readings, literature, who believes that we're certainly going to see vast increases in China in the region over the next 10 years at the expense of the United States and its partners? So around 60-70%. Who believes that for the broader region to prosper, a grand bargain must be made as a sine qua non with Iran? Yay, nay?
Prosper, yeah.
As in, for us to continue driving on with prosperity, etc., a deal has to be made with Iran, despite the anger that is natural across the region, given what's happened. Who believes that is the case, right? Okay. So yeah, very interesting. So I used to have a professor in the UK, and he framed things very nicely around, in and around the Arab Spring before and after. It was least integrated region in the world in terms of trade volume. I know Alain used to do great work on this at the World Economic Forum, that place. Yes. There are 2 big elements which are missing, sadly, from our region, despite we talking about Arab conference as a monolith or a collective. And it's dearth of a private sector and a dearth of regional commons, right? If you've got silos, Algeria, Morocco closed, Syria at a moment in time, Iraq on a Tuesday, Yemen on a Thursday, Saudi, UAE divergence, Qatar blockade, we can go on and on and on and on, right? If you've always got issues, you can't get those regional commons, be it infrastructure or otherwise. So I'm trying to lace the conversation and make it a bit more challenging for you. Connectivity piece. Reconstruction. Who's going to pay for all of this? We just heard a crazy number of 200 odd billion in Iran. Syria, we've heard in the tens of billions. There's that place that hasn't even come up in the conversation called Gaza. Remember Gaza, Board of Peace, that thing like 2 months ago before everything happened? So you've got that. You've got Yemen, where Aden used to be the second busiest port in the world. We were discussing at dinner last night. Tell me, how does one even start with a project like Syria? We've seen Shorooq in Riyadh, in Washington. He was at Downing Street the other day. Where is this going? Who's going to pay for it? What are going to be the management fees for Citibank?
That means you're asking
Who's going to pay the bills?
No, listen,
and where do sovereign wealth funds come into this? Because I know you don't believe in the term first loss capital, right? You think it's rubbish.
Yeah. So listen, I think we need, these countries will need to tap at a later stage into capital markets. There's no other way. And I can give you, I can share a little bit around Syria, for example, which is not an obvious name, but they are very, very focused on doing whatever is necessary to get that. They understand that's where they're going to get the long-term capital for the long-term challenge.
Yes.
But in the meantime, of course, they will have to rely on getting, call it private placements with the big players in the region.
But how do you bring down those risk premia? Where does the insurance come from? What if there's snapback from Treasury? Like, what does this look like?
No, the regional players will have to play the first loss game.
Yes.
They will have to lead. They will have to build the confidence. There's no chance one of these countries can go to the capital market and issue a bond. I was 2 weeks ago, I was working on the first bond for DRC in Africa. It was seen as a country that could never issue a bond. So things, you can get there. And I'm pretty sure a country like Syria will get there at some point. But the local big players will have to lead the way, will have to take the first loss, will have to be the ones bringing down the risk premium. A lot of communication, a lot of transparency needs to happen. So that's the only comment I can make, honestly.
Mahmoud.
Maybe to add, the way that I think about this sort of situation as a private investor, usually, and we are blessed again in the region that we have different type of resources, assets, natural resources, in each one of these kind of countries that can become viable and sort of kind of a G2G relationship, right? So now specifically on Syria, I would say for us, we've been looking at the kind of the digital infrastructure in the market, and maybe this is sort of kind of come from our story when we started kind of looking at investing in technology and entrepreneurs. We started in markets that the physical infrastructure was existing, right? UAE, Saudi, even Egypt, Pakistan, and all of these different kind of markets. But a country like Syria, connectivity is not even there, right? So how do you bring the kind of the connectivity to a market that hasn't been kind of connected? The geography of the country played an important role of saying, like, look, I can be a corridor that can connect the east with the west, right? Bypassing, we were talking about connectivity and sort of kind of some of geopolitical risk, Bab al-Mandeb, and guess what? This also kind of shortened the times of sort of kind of the transmission of data by 30 milliseconds, and that's a huge as a corridor, right? So that kind of bring Saudi or STC as a Saudi kind of company to say, look, I'm going to build
This is Saudi Telecom.
Saudi Telecom, right? They say, okay, we want to build the backbone of that and sort of kind of take, it is of course an economic opportunity, but also take advantage of the geography and generate a USD-based income from that kind of corridor. Now, someone like us who's going to look at this and say, if the data is moving, what can we do? in terms of sort of kind of that application layer is sort of kind of getting one step of tech stack on top of that.
Mahmoud, do you mind, just for the benefit of the distinguished guests, so you're an alternative investment manager,
Yeah.
you see a great opportunity in Syria. How do you even start that conversation? Did you have phone calls to the new government ready? I mean, like, just give us just a few of the
Yes.
top line milestones and what would be the next steps, the roadmap, and maybe we've got partners here who can maybe support as well.
Yeah, so the UAE as an anchor economy in the GCC,
Yes.
alongside I would say Saudi, Qatar, and all of these, hosted President Shara, I think April last year.
Yeah.
Our President Sheikh Mohammed bin Zayed met him. After that, I met him, and we had a kind of conversation. And the discussion was about what can we do as a tech investor in a country like as a country that's destroyed, that does not have, unfortunately, the basic necessity of goods and services. We always fundamentally believe that the beauty of technology is bring inclusion, and it is a lot more effective in distributing goods and services for the wider communities and people, right? So when we started that kind of conversation, we realized, okay, we cannot start as a venture capitalist in Syria. Like the infrastructure is not there. A country of that sort of kind of size, geography, people, displacement is not effective or not ready for that. So you take a step back and say, okay, what do we need? Now, usually if you look at any market, for distribution of goods and services to start, and tech layer, you need two things. You need logistics and you need payments,
Yes.
right? And you need connectivity, mobile, right? Mobile and connectivity. And these three things are missing. So we starting with, okay, how can we bring the connectivity to the market, right? So there is, of course, the fiber network that I talked about, but also we are investor in a network, what we call them sort of kind of fiber network operation. That is a modern kind of architect that can distribute the fiber kind of network in a more effective way, and we bring in that kind of capabilities to the country, right? But that's not enough, right? You still need people to finance the physical infrastructure of laying the cables and all of that.
Security.
You need security, of course, but like to finance infrastructure, you need whether insurance or you need the private sector, or you need local issuance, international issuance, and all of these things. And you need an institution to be able to do these issuances, right? So those kind of building blocks. So this will take time. But at the same time, there is a financial inclusion piece that is completely missing, right? Today you cannot transact, or the transactions are happening in a platform that sits outside the financial system. Right, we've been investing a lot in the payment infrastructure and banking and wallets and all of these things. We can now combine all of these and bring a solution that's sort of kind of to bank the masses in a country like Syria. So that's how you would sort of kind of marry, I would say, alternative investing, where you have a huge portfolio in different sectors and a new market that's opening like.
So what would
Syria.
be, as we move on with the conversation, if there were two things that you'd need to drive on what you're doing, what would it look like, sort of headlines?
Connectivity, financial services are key things that we are bullish on in a market like that, but what we need is a political stability.
Yeah.
But you know, on this front, you can learn a lot from what happened in certain countries in Africa.
Exactly.
Right?
Exactly.
And you can pick the best lessons. You can learn from those mistakes. And when it comes to connectivity...
Can we have country names, please?
Kenya is the first digital bank.
So Kenya is, on the fintech side, on the financial services, I think Kenya will lead the way.
Absolutely.
In terms of connectivity, I think now Nigeria is doing a big effort. Places like DRC. DRC is the size of Europe.
Yes.
You cannot go by road from the capital to most of the country.
That's right.
There are just no roads.
Yes, no, yep.
So, but it's happening. And you need, of course, the insurance. For example, I know for a fact that MEA is already working very closely.
The Multilateral Investment Guarantee Agency.
Which is part of the World Bank for insurance, is already working in the country. You will have the multilaterals, the World Banks of this world, they have to get involved. You will have DFIs, and in the case of Syria, DFIs meaning development and financial institutions that help development. In Syria, you will have the sovereign wealth funds and the governments of
Do we call this blended finance or something else?
As well. So those will come, those will lead the way.
Yeah.
And they will trigger, and I think there is a template that can be followed. Then on the financial services, that's for the connectivity side. On the financial services, I always say, with my African hat, that in the developed, mature world, fintech disrupted the financial system. In Africa, fintech erupted a financial system.
Yes.
And I think Syria is somehow in the same place.
Yeah.
And seeing what he is doing gives us a lot of hope that it will erupt, and it will erupt fast.
Absolutely. Alain, could you maybe just for the purposes of sort of the investment view, MAF, where you were leading the conglomerate, you understand had some of the world's leading malls. You were working with IKEA, correct?
No,
not IKEA. Okay.
Carrefour.
Carrefour, that small place. When looking at frontier markets in the region, at what moment would you say, khalas, we're going in? For example, in that post 2011, 2013 period, what was attractive? Was it Libya on a Tuesday, Syria? And, of course, the security piece, but were there moments where you were about to go in and it stopped, and then you just say, we're going to park that and put it in a freezer? Like what?
So look, the countries in the region are all attractive. Their policies are not.
Yeah.
So Syria, Libya, for example, were attractive. I've done business in Syria. We've invested in real estate in Syria. I've entered Carrefour in Syria, and before the war in Halab. We've worked in Syria. So the reality of Syria is not what's being described. Okay, there is a bit of that. And I agree with Miguel. Syria is going to leapfrog, subject to its policies, continue to be market-friendly policies.
Yes.
Okay. The only problem Syria faced in the past is a problem of basically, how would I call it? It's difficult to make justice to the stupidity of the policies that were implemented in Syria. I think stupidity is the best word. So the problem in Syria was simply Syria did not want business in Syria. Okay, there was a time, 5-6 years, that you're talking about pre-2011, where actually they wanted to attract some investments, but actually they wanted to attract some investments to be part of those investments.
Yes.
They wanted to find a way to actually privatize the economy through nepotism. Okay?
Crony capitalism.
In our case, we've invested in Syria, but we refuse, of course, to be part of any of that. And at the end of the day, there is a banking system in Syria that was functioning. Okay, the problem of the banking system in Syria was that it became disconnected of the global banking system because of SWIFT. Now it's back.
Yes.
Okay. 2, in Syria there is a telecom infrastructure that was working. Okay, yes. It needs capital investment. That's not difficult. Yes. Syria currently is talking to Google, to Microsoft, to others, to Amazon, in order to implement data centers in Syria. They're talking about upgrading their fiber network across the country. Yes. They're talking about basically getting investment primarily in sovereign projects, this is how it always starts. It starts by friendly governments, friendly money coming in on good terms, okay, that actually will be profitable if it works. And the local government has to guarantee that the policies will continue to be friendly in order to lay down big infrastructure projects. One thing, the region, the Middle East region, that includes the Gulf and what I call the Syrian diaspora across the world. Yes. So let's take that as a region, okay, is highly cash liquid. So you're going to see their requirements to invest are much lower, and their risk appetite is much higher than what Miguel represents, for example, or what Mahmoud could represent. So this is how it will start. And I personally think if the policies continue and become to be more friendly, I don't think the reconstruction is be a big issue. Who's gonna basically foot the bill in the region is going to be the region.
Absolutely.
And some of it's going to be private sector through capital markets and so on, and some other is going to be sovereign money.
This point's so interesting. I was actually in Kenya in February, and we were discussing diasporic thresholds being lower, and actually it's very relevant, of course, for the very flourishing Syrian community in Arab world.
I invested in Kenya. I mean, we're number one. We're number one in Kenya in grocery retail because of the leapfrog that Kenya
highly
has been
educated
able to do.
population,
Absolutely.
similar to Syria, Kenyans.
Yeah.
But just on that, you mentioned friends in the region. Friends change. Last year it was UAE. This year it seems to be more Saudi Arabia. Unless I'm being mistaken and being provocative on the stage for no reason.
I think it's interesting because you use the word change.
Yeah.
So change means change. It's continuous change. So it's not an issue. Friends, it doesn't mean you have to keep the same friends all the time. As long as they
I'm a
don't
loyal person. I like
know
to have the
that.
same friends.
As long as they don't become enemies.
Yeah.
Okay. I have to give it to Syria in the past year more or less. I think year plus. Syria has been able to develop a network of friends that it never had for the past 50 years.
Yeah, yeah.
Okay. So I think it's a work in progress. I would give them a lot of credit to what they've done. Very few countries have been able to do this much in such a little
short
time.
time.
Friendships in the region will always be a bit fluid, but they will always be there.
Yeah.
Yeah, I couldn't agree more.
And do you see, before we go to the audience and start bringing in
I
some
even
questions,
think that Algeria was going to develop more friends in the region.
we don't do friends. And Algeria has immense potential, but TBC.
Very true.
I think we had the Moroccan ambassador here yesterday, and we were discussing, though I described the region as being the least integrated, as a sub-region it's the Maghreb. So least integrated region in the world in terms of trade volume at 3%.
Yeah.
But one thing that many don't discuss, and this is relevant to Syria, Lebanon, is tahrib or smuggling, which fall outside of the
Which is
stats.
always the case when you have least integration.
But you know what's really interesting about...
That's another form of integration.
It is, but you know what's interesting about informal sectors, and they're usually viewed as very negative and rudimentary and basic, and even the word primitive comes up, and we've got development economists in the audience, is it actually does give, it sort of offers the characteristics of for a service economy, because if you have the sales, etc., and the marketing. We're going to come to you in the audience in about a minute, but just very, very quick questions, i.e. quick answers. Bullish on Syria, yes, no?
Yes.
Bullish on Gaza, yes, no?
Economically?
One word is the...
Yes.
Bullish on Yemen, yes, no?
Neutral?
Wow. Miguel, bullish on Gaza?
Neutral.
No? No?
No.
Bullish on Syria?
Yes.
More.
More. Very good. And
More than Gaza.
do you see genuine potential for Arabs to finally cooperate and put the word C in the Gulf Cooperation Council as it enters its 45th year in May?
I'm not sure the infrastructure for cooperation is going to be the one that has been laid down in the past. But I want to tell you one thing, because I worked so much on the integration of the region, and I've issued 3 white papers.
You failed, right?
about it. I failed, yeah. The region is still not integrated. But this is a topic that I worked a lot on, and I really believe is needed. And as you mentioned, everyone comes at a point that says this region needs more integrated. I just want to tell our audience, I think it's very important, what is the size of the prize? Okay, we represent 8.4% of global population, and I've worked on a region that actually goes from Pakistan to Morocco, excluding Iran and Turkey, because I worked on basically the density of the network, of the mesh in this, the exchanges in between these countries. 8.4% of the population, we produce 3.4% of global GDP.
Yeah.
What does this mean? It means that everyone that lives in that part of the world produces half of a human being on as the average of the global productivity.
That's right.
So this actually tells you how big is the gap. Now, on the other side, the price is actually doubling the size of our GDPs. Currently, we have a GDP of about $3.3 to $3.2 billion. We could double trillion dollars. Sorry, we could double that only by integrating the region, i.e., by allowing free movement of people, capital, data, and services. That's all. So all what we need to do is to basically deregulate and simplify. We don't need more investments, and these are without further investments. Now, if we put investments on top, of course, the prize will be much bigger. So it is a huge economic opportunity. Now with AI and technology, we even have the ability to do even further. For a region that actually will have about 150 million people that will enter the workforce between now and 2040.
Alain, just to make your life a bit more difficult, and I do need an answer to this question, and it's double-ended. Everybody familiar with Ibn Khaldun? right? One of the more famous quotes from Ibn Muqaddimah is, strong merchants shall eventually surpass their rulers, which suggests that a genuine independent private sector is a threat to incumbents, and incumbents don't want competition from outside. So how do you square the competition from outside if I have my monopoly in country X?
I think Ibn Khaldun was right at that point in time, but because he is Ibn Khaldun doesn't make him right every time.
No, we're not talking about Ibn Khaldun is a metaphor for the competition.
But what I want to tell you is the biggest, I would say, gap in the region is a private sector that really punching at its weight. And I agree with you, the private sector is the biggest drawback of the region, but also the biggest opportunity. In my opinion, in the region and in the economies that matter in the region currently, okay, there has never been a more harmonious relationship between merchants and governors. So I think we are at a point in time where actually, okay, the dynamics are different. It's either we build on that or we don't. Today, I think in the most vibrant economies in the region, the relationship works. What we need to do is to build more on that. And I think the level of crisis that we entered into, whether it's Syria and basically the beginning of a solution, whether it's now Iran and others, pushes the region for real solutions. So there is a real chance, this is why I'm very optimistic, there is a real chance for the future of the region not to be a repeat of its past.
Thank you.
Can I offer a slightly different thought? So I am optimistic on the region and all of that, but my own sort of kind of feeling and assessment, I don't think the region is the same region anymore, right? And I think today countries are really invited, unfortunately or fortunately, it depends on which side of the table you said, that they're going to focus on their own kind of countries. Like, I can tell you, and you have seen it probably, Alain, like in the UAE, you can spend a lot of time with integration, and the price is high, but the cost is really high. Or you can spend time outside the region, and the price is high, and the execution is less risky, and you can get it, right? So I think it is interesting times for the region. We are bullish, but I think it is time for also countries, different countries, to pick up their own issues and solve them, and they sort of kind of make a bit of integration rather than, I would say, an expectation of other people to kind of come and bid and help. I think that kind of mindset
I agree. The solution is going to come from within. Absolutely. It has to come from within. The good thing now, I think, we have more of a burning platform to make it happen.
That's right. That's right. Yeah, geography's destiny remains a cruel opponent, remains undefeated. Muhammad Ali of this. We now like to come to you in the audience. We're going to ask you for your name, affiliation, and question. And if you could direct it at a specific person, if you don't say that, we assume it's open. Who would like to start? We have Sara Al-Ka'bi at the front here.
My name is Sara. I'm a student studying public policy at the Harvard Kennedy School. And I'm interested in knowing more about Mahmoud's point on localization versus regionalization. If there's one friction point that you can remove to kind of promote that regionalization across the MENA region, what would that point be? And it's a question open to all the panelists, but since Mahmoud brought it up, I'd love to hear more about that.
Thank you. We're going to take them in threes, if that's okay. Please, sir, at the front.
Thank you for this. My name's Amin with Morgan Stanley. I'm an alternative investments director. My question is more tailored towards Miguel, and you touched on the public markets, and very exciting to hear all the buzz in the private markets from kind of our friends in the VC space, the different private equity firms. But ultimately, with that model, something that's always going to be on their mind is they need to realize, their investments and return their capital to investors. So they're going to need liquidity events. And typically here, the IPO markets are kind of vast. So you kind of touched on the importance of the capital markets, but your honest assessment over what you think, the public markets looks like in our region over the next 5-10 years, its development, and maybe sharing just with the crowd its importance to the overall ecosystem.
Thank you. We'd like to get one more question.
Hi, my name is DR. I'm a computer engineer in Westboro, and I was wondering, you mentioned that you want to get like free connectivity and move of labor and stuff in the Middle East, in the MENA region. So how are you going to do that where none of these countries have like share the same currency or have the same like rules about private entrepreneurship and stuff like that, especially comparing that to somewhere like Europe, where you see a lot of these even more developed economies and having burden on the EU trade bloc. So how is that going to work out in the Middle East?
Thank you. Excellent questions. Question 1 and 3 have some connection. The first one was around unlocking the region and sort of reducing frictions and what that could look like. We had the question on public markets. Miguel, to you, Tadawul, ADX, where is this going? Maybe you could bring in Egypt or Madunya, has it featured in the conversation? And then there was the question around on the connectivity and infrastructure piece, harmonization of currencies or lack thereof. If the EU can't do it, why can you?
Looking at me. So I think probably I'd make this kind of more personal. As we grew up in, let's say, Arab nations, right? And the Qawmiyya al-Arabiyya and all of these things, or at least we've been hearing about these stuff, right? And as you become more sort of kind of grown up and adult and realize there is a lot of sort of, there's borders, there is different sort of kind of business conduct, etiquettes, whatever you want to call them, etc. And I think what we have observed over the past now kind of decades or so, an expectation that the resourceful kind of country to support the unresourceful countries, right? Which at a high level kind of makes sense. But what we are, I think, observing as well is that kind of support comes with an expectation that there is an expectation you sort of kind of perform, you learn, you grow, you perform, you become sort of kind of a contributor, you sort of kind of become part of the filling in the gap. I think that expectation is missing, right? Or that expectation is not fulfilled. So the question becomes like, look, do I continue to do that, or I can generate peace or integration, or generate integration and trade through sort of kind of other ways? And I think, at least from my point of view, I see the latter is kind of happening a little bit kind of more, or I would say make a lot more rational kind of argument, while you want to continue to do the bare minimum to stabilize the region. You don't want to be in a region that is not like security is important for all of us, right? So that's I think kind of my personal view.
But if we were to hone in on Sara's question, for example, and dive, what were the concrete examples of how you're thinking about currency risk in Syria, for example, or non-tariff measures in the region?
Look, if you talk specifically about kind of country risk or currency risk and non-tariff and all of these things, again, in a Syrian example, to Alain's point, if the policies are becoming more and more friendly, where you are, so today Syria has affordable labor. I don't like to kind of call it cheap labor. You have affordable labor. You do have agriculture, sort of kind of industry that can be built, industrial that can be built, right? If a person A come and invest in that kind of country, and that good and service is being generated in Syria and being exported, then the expectation of productivity and filling in the gap is happening, and I would say that integration is a good example. I think that where the integration is not a good example is you go and you sort of kind of invest in building a factory or an agriculture kind of base, but then the output is not there, and you continue to subsidize it, and you continue sort of kind of put more money because now I have a bigger problem and bigger kind of people to feed and what have you. That's not a good example, right? I want to touch on the question about markets and etc. Yes. I think this is a problem we have and we acknowledge, right, as a market, and it is on us to solve it, right? The IPO market is a sizable. The fluidity of IPO and the quality of the IPO and the retail participation.
What is an IPO?
Initial public offering, where you can take companies public, where you can enable the participant or the masses to sort of own piece of the company, including an institution, That is a lot of work to be done. Saudi is actually quite advanced on that versus, I would say, the UAE, especially on the private side kind of company.
Largest IPO ever, right, with Aramco?
So yeah, that's government backed. And we have a very active government kind of backed kind of enterprises. I think how do you transition families, if any, to sort of the public market and transition?
Do we see more family businesses going IPO to import governance and get around succession issues, or is it about capital? Do we have any thoughts on that? It's a big question.
Okay. Let me try to, because half of the question has been already answered and very well answered. No, listen, I think Saudi is a good example of what can be done. Of course, there's a large population there. I think the UAE was going in the right direction and is going in the right direction. Hopefully, more government-driven than family-driven. But the government-driven transactions were very well done. They created a fan club globally. They created a fan club. I ran a conversation last Wednesday, 4 a.m. in the morning here in Washington with His Excellency Elal Al-Mari, who we invited.
Who's Elal Al-Mari?
So, yeah, you're right. He's the head of Department of Economy and Tourism, effectively kind of the Minister of Economy and Tourism in Dubai, not UAE. And this was a call to explain to investors, and primarily equity investors, what was going on. We had more than 100 people dialing in.
Wow.
Just to listen and understand what's happening. So the interest is there, to the point around families. I think the first wave was government. The second wave needs to be families.
Yes.
There was some successful, some not so successful IPOs in the region. Lessons has been learned. And the third is the sort of the private equity venture capital transactions. And I think we are moving in that direction. I think there is a big support to move in that direction. We need other countries in the region to join this effort. And we haven't discussed Egypt yet. Of course, Alain has been a huge investor in Egypt in the MAF days. I think Egypt is a super interesting country.
Can I embarrass Alain? I just remembered something. I don't know if I don't even know if you remember this. We invited you to a conference in Italy several years ago. It was the weirdest excuse I ever received in my life. I don't know if you remember this, correct me if I'm wrong. It was, we're going to have a panel, and it ended up being not so good, so alhamdulillah you're with us today. It was, sorry, Alain can't make it. He's with Will.i.am.
Yeah, possible.
I'm not joking. That was, I read it. I was like, what?
That sounds to me like a great excuse.
Nothing, but that was a great excuse. And, I wanted you on the panel to discuss.
A great reason not to join the panel.
Who gave you the excuse? I'm sure it was
your team.
Accurate.
Is it? Because I'm a bit autistic.
I'm sure it was accurate.
I'm a bit autistic, and I think I remember the name Tracy.
Tracy. Yeah. But where was the conference?
2019 or 20 in Rome. In Rome.
Okay.
Anyway, we want to get one more round, but Alain, could you just come in top line on a couple of these points? What is going to unlock the region? If you had to pick two panaceas that are affordable and not pigs in the sky.
So one is, if Europe can't make it, doesn't mean the region can't make it. Europe cannot make it because of the political will.
But we don't have a Konrad Adenauer or Robert Schuman in our region.
No, you don't need that, but you'll find new names. The point is, Europe doesn't want to do it because Europe does not have the political will to do it for different reasons. Okay, I'm not saying it's wrong. I'm not saying it's right. I think it's going to end up to be wrong. But these are political choices. The Konrad Adenauers of Europe actually integrated a region with different currencies, with different systems, at a time where technology was not what it is today. So to Diyar's question, yes, the region can be integrated with different currencies, with different systems, because harmonizing the system through technology today is much easier. Yes. If you have a visa to one country, it can be adopted to anywhere else. Schengen is a great example, and so on and so forth. So that's one. Two, talking about capital markets, families, and what have you, capital markets are not the place you go to get governance. This is wrong. No one is going to let go of value to get governance. I mean, governance is a service that you buy. The point is, do you want governance? And this is about the maturity of the business thinking. So saying that we're going to bring families to capital markets so they can get governance, of course they're not going to do it. Okay, and you go to capital markets for two reasons. One, if you want an exit. Okay, and most people in the region are very long-term players in their business. They don't want to exit. Their issue is how do you go from one generation to the other. And to be fair, the region is young. Most of the business in the region are less than 100 years old. Okay, they're moving from the first to the second generation, some from the second to the third. So it's not really, I mean, they're still getting there. Two, you go there because you need money. The fact that the region is not, if you don't want to exit, the fact that the region is not integrated, there is a limited need for money in the private sector in the region. So the private sector in the region has been happy with banks that have structural misalignments in terms of their deposit physiology, and basically they're fine to have actually short-term funding. Yeah. Okay, you still have the ability to go to bonds, which what we've done. Okay, whether it's Sukuk or whether it's conventional bonds, and then you can go to the market. To go to the market, you need three things to come together. One is the need for them. Two is a good and a favorable taxation system that pushes you towards that. The region did not have a taxation system. I'm very happy that now we have a corporate income tax. This is going to change dramatically the way corporates behave. And three, you need to have actually a legal framework that incentivizes you to do that, which I think now there is an understanding around that. It's going to take time, okay? So liquidity events in the region are not going to come, in my opinion, in the coming 5 to 7 years, maybe after 10 years, will come primarily from ability to access capital market. But I think that Syria, Egypt has actually a relatively vibrant capital market in comparison. It could be much better, of course. Some markets will be able to actually do faster if they commit to transparency and to governance.
Quick political question before we go back to the audience on Egypt. Do relations in the region depend?
I thought you wanted one word.
Depend on the Ras Al Hikmas and the Qatari injection recently. Are these things sustainable if the politics don't continue to work?
Sorry, come again?
We had a massive injection from the UAE 2 years ago. Ras Al Hikma, tens of billions of dollars. 35 plus change, I believe, depending on the build, right? Are these how contingent are these on regional politics?
So, again, my opinion. Ras Al Hikma was not politics. Okay, there is of course politics underground somewhere.
So Egypt was the best investment globally, and you want to go and put 35 billion in there?
Yes. I'll tell you why. Because that was the only way for the UAE to actually get its money back. Ras Al Hikma was a payback.
As an investment.
It turned into an investment. So basically, Ras Al Hikma is like, you buy a safe note in a startup, okay, or a convertible. Okay, you're not going to get the money back. You decide to convert. Okay, the UAE politically gave so much money to Egypt. Okay, the money wasn't coming back. They said, you know what? Give us land. Okay, so what they've done, they converted a note. So from a UAE standpoint, it was the best investment they could get, because on the other side was actually it was the write-off.
Thank you.
So would they do it again?
That's a question.
That's a question.
We've got a final round. I'd like to start with the gentleman at the front with the New York Yankees white cap. We're in Boston, Celtics here.
Just a quick question, maybe for you, Adel, or anyone in the panel. So the Mohammed Saeed HSA Group, just a quick question, the latest conflict between Iran, Israel, the US, they eventually reached to a ceasefire, at least, or a fragile ceasefire. The GCC felt the economic pain, felt the reputational pain, felt the physical pain, but it doesn't seem to be involved in any, at least from the outset, in any of the negotiations or any of the discussions on the way forward. So who really is the pen holder in the region, GCC, the MENA? Is it the Pakistanis, the Iranians, the US? And who should the people look into as an investor, or the people of the region, who should they look into if we're completely left out, or at least from the outset?
Thank you. We're going to come back to that. So we brought geopolitics front and center. No second questions on this occasion. Please. We've got a mic coming to you. Thank you so much. Do we have anybody at the back? Any non-males? No?
Hey, thank you. First of all, my name is Taha. I'm from Syria. Currently, I'm undergrad finance student at Towson, Maryland. So my question is for Alain. So if deregulating in the MENA area, like to bring investment to these countries, especially like if we have like the GCC have a lot of like capitals, like a lot of cash capitals, and some countries they have human capital. So if we bring this investment like to Syria, to like some North African countries, does that going to increase the risk in the future for like future risk on how there's going to be involvement in these investments in these countries?
Could you clarify the question a little bit?
So, so like if the countries deregulate, they're like politically, does that going to affect the risk on how they control these countries in like in the long term?
You mean if deregulation will actually end up loosening control?
Yes.
Yeah.
Okay.
Thank you. We've got a final question. The woman who works on water, who is partially Moroccan, and explained that yesterday very eloquently, and always asked very smart questions as she's about to do right now.
Hi everyone, my name is Hasna. Thank you very much for such an informative panel and such a dynamic conversation this early in the morning. My question is similar to the human capital side of things. I'm wondering, in the face of crisis, we've seen a lot of expats flee the region, and that undoubtedly affects negatively economic prosperity and also longevity. We also have this question of, I guess, visas, and then ultimately leading into, or not leading into, citizenship as we see in other countries. So I'm wondering how this question of status, citizenship status or visa status might be harming the region, and how can we create and develop a workforce that is more invested in the prosperity of the region.
So what do you mean by citizenship? Are you speaking to specific countries that do not offer citizenship? Or?
I'm thinking about the case of the Gulf,
Okay,
and how there is the advent of the golden visa and other incentives to bring talent into the region, but we're kind of seeing how that can backfire if there isn't other terms of greater investment in the region when it comes to crisis.
Thank you so much. So we've got the question on risk and deregulation. We've got the question on GCC, some of the largest defense spenders on the planet. We spoke about treaties versus bases, but not having perhaps a seat at the table, question mark. And then we've got a question on 50 shades of visa, platinum, gold, silver, and where this is going, and is that a way for Dubai to bounce back with giving a little bit more to non-nationals, for example, and to make it more attractive? Any thoughts on any of the above? And then we'll tie a knot on a conversation.
So look, I'll start with the question on who's the pen holder.
Easy one.
Yeah, I think the pen holder obviously is the US, but I don't think that the region is not part of the conversation. There is a difference between, I mean, this war was a war that actually was started by the US, okay, and Israel against Iran. The region has always been very clear saying we don't want war, and they've been very, I would say, actively both trying to convince the Iranians to find a way forward with the US, because this is they're serious about it this time. I think the US turned out to be serious about it, and they're tackling the issue. The stance of the region has always been, this is not our war, this is not a war that we wanted a solution without a war. You've imposed a war on us, both Iranians and the others, find a solution. But this solution is going to take into account for sure what's happening in the region. I think the region has brought much closer than ever the US and the region and the US. And I think there are bits and pieces of the conversation that's happening, whether it's in Islamabad or elsewhere, without having to have a seat on the table. Maybe at the end there will be kind of an enlargement for the optics of it, but I think they are part of it. That's
Alan, did that defense pact with Pakistan, was it worth the ink on the paper? Did it bring anything?
Look, the defense pact with Pakistan, I think, was strategically the good move. I mean, Pakistan needs to fund itself to defend.
Because I heard some countries pulled money out and others put money in, right?
Yeah, of course. Which I think, in my opinion, is two things. One is, I think Saudi Arabia has been playing a very smart game in to try to, as much as possible, I would say, kind of contour Iran, whether with the relationship with Beijing, with China originally, and now more actively with Pakistan, and being able to use Pakistan eventually, and vice versa, in any defensive strategy against Iran. Of course, on the other side, we've seen that the UAE had already developed capabilities, the relationship with China and the region, and also with Pakistan. I think there was a point whereby they said, you know what, since now you've got all of this, you can repay the money. And we've seen the Prime Minister of Pakistan flying in, asking for $5 billion to repay that money. So actually it worked.
Thank you, Alain. Miguel, did you want to comment on any of those points?
Maybe on the sort of the visa, I actually think that the current system is working super well. I don't think it needs more than that. They are attracting everyone they want. The key issue going forward is whether we can go back to something similar to what was there in terms of confidence, trust, security, safety. And this goes to what Alain was saying, is being part of the solution and getting a final outcome that provides safety not only for those in the region, but also from those outside of the region to feel comfortable to come into the region, because the region, and in particular UAE, leaves off attracting a lot of people. It's not only getting those that left to come back, it's keep attracting. I think Dubai was getting, official number is 25,000 people a month as residents.
7,000 millionaires a year or something like this.
Before the crisis, and they need to keep having that people coming to Dubai. So, but I think the ingredients are all there. No, and of course citizenship, I don't see it.
I just want to comment, sorry Mahmoud, before on what Miguel has said. I just want to tell you something. People are going to become less important going forward. Yeah. The region doesn't need to attract people as much as they needed to attract people before. Okay, I mean, I'm getting ahead of myself on my fireside chat, just a bit afterward. But growth going forward is not going to be coming from more job creation and people. It's going to come from more AI and robotics, and it's going to decouple. So the region already is getting what it needs. I think going forward, there's going to be less of a focus on attracting more, because economic growth, value creation, is not going to be linked anymore as much as it has been linked so far to actually people.
You heard it here first. Less Arabs, more robots. Perfect. Mahmoud.
So I'll just share some data on the kind of the talent left or the fleeing. Sort of, that's one way to kind of put it, but I don't think that's actually the reality on the ground. Of course, there are people who did leave. That's factual. We have seen in some of our kind of companies, because we do have some retail businesses or like payment businesses, so we see the flow of money, etc. First week, 40% drop. Second week, back to 30%, 20%. As of last week, is 90%. Right. So the 90% of the people or of the consumers, right, are still there. Right. Which is honestly incredible. I think what is the structural thing that happened in this moment in time is the tourism, right? As confidence gets restored, you start to kind of see tourism back. Emirates still, I think, what's flying at 70-80% capacity, right? Just to kind of put things in perspective, connecting the east with the west, is it 70% of that through Emirates, Etihad, and Qatar Airways, I think.
And Riyadh Air is about to take off very soon as well.
So actually the world need our region to be there and come back, and it's already sort of kind of coming back.
Thank you. We'll carry on the conversation in the corridors around aviation concentration and data centers. But just as we wrap up and thank our colleagues in the usual way, who thinks that we're going to see more Arab agency, to speak to the question from the gentleman in New York, baseball cap that left? Who thinks we'll see more Arab agency in the next 3 to 5 years when it comes to global affairs? Or who thinks we'll be takers of global order? Takers versus, I won't say makers, but more influence. Takers, hands up. Okay. Who thinks we're going to see more Arab, minorities included, Arab world integration in the region in the coming 3 to 5 years? Great. So about 70%. One thing that's sure is who likes tuna? Does anybody like tuna here? The term tuna, it's a great one, Miguel, you like it. Turbulence, uncertainty, novelty, and ambiguity. That's a guarantee in our region. On that note, I'd like to thank our blockbuster speakers and great questions from you in the audience. Thank you so much.